Welcome back. Good morning, Alessio Rastani. How you doing, Alessio?
Hey, hi, Steve. Good to talk to you again.
Yeah, and you. Now, Alessio, the weekend, Sunday, the big announcement, 100 billion euro bailout. Everything's fine. Spain's going to get back on track, and the Spanish politicians are all saying, yeah, it's no problem. And it gave, 2 days grace?
Yeah, I would say, listen, the thing is, Steve, that a lot of people are extremely gloomy, and there's kind of a doom and gloom in the media right now. If you put on any television station and, of course, radio stations, they do talk about this doom and gloom in the European, and what you seem to hear is, the European Union is going to fall apart, and everything in the euro is going to go down the toilet. But actually, if there's one thing that I'm sure you'll agree with, and I know this has been established, which is whenever people are expecting one thing, the markets always do the opposite. Okay, it's like that's the way the markets work. When everybody is getting too gloomy and too bearish, too negative about which way the markets will go, and they will always do the opposite of what everybody else is expecting. So actually, I don't think that I don't think the European Union is going to go, is going to fall apart.
No?
One thing I can tell you this. One thing we can be sure of is the banks, the people in charge, the banks. They want their loans to be paid back. They want their loans to get paid back, and they will do anything. They will continue to throw money. They will continue to print money to dig themselves out of this European hole. In fact, the truth is that the banks are targeting a 2.5 to 3% inflation rate annually. So I very much doubt that the banks, the people in charge again, that they're going to allow this whole mess to get accelerated, and they're going to essentially what people will find is very soon the markets could very well rally.
Right. Now, you said twice there, the people in charge. Do you really mean that the banks are in charge here and they're telling the politicians what the story is?
Yeah, don't get me wrong here. I'm not some sort of I'm not some kind of conspiracy theorist nut job. I'm not like that at all. But one thing, the reason why I say that is because almost everything in the end is tied to the banks. And the people in charge, because who owns the wealth of the world? Who owns the majority of the world's wealth? Well, if you think about it, everything in the world is tied to land, property. Just to explain myself very clearly, let's say, for example, Steve, you found oil or gold in your back garden.
Mm-hmm.
Okay, now somebody wants to buy your back garden from you. Okay, maybe I want to buy it from you. You've got gold in your back garden, right? So what am I going to do? I'm going to go to the bank and get a loan or get a mortgage to buy your garden. So in other words, the money is not so much tied up in the gold that's in your garden, but in the property, the land. If you see what I'm saying here.
Yeah.
So, in other words, it's not so much the gold itself that has so much value, but it's the land, your property that has the gold in it. So that's why everything goes back to the banks. So I would have to go to the bank, get a mortgage, get that piece of land. So in other words, the banks really control the majority of the world's wealth. They're the guys with the big money. They have unlimited cash at their disposal, and they will continue to print money, or what's known as quantitative easing, to dig themselves out of a financial hole. They don't want this crisis to get worse than it already is, because they themselves have money invested. And if there's one thing, history always repeats itself. They will continue to print. They will continue to work towards inflation, and basically their whole goal is to dig themselves out of this through inflation in the long term. Which we know that's going to lead to disaster eventually down the line in the long term.
Yeah.
But in the short term, it's going to boost the market, and it's going to essentially just save them for the next, God knows, 6 to 12 months, maybe a couple of years from now.
Well, it's funny. You've explained that there in a way that the simplest of intelligence could understand, and your thinking process, and why the banks rule the world, or for want of a better expression. But I think anybody could guess it there, the way that you've just put that down. And you're not coming across as a conspiracy theorist. Now, you've just touched again on something else that I wanted to ask you about. Look, I'm no financial expert. I did basic economics in my business studies at college. But one of the golden rules is printing money is a recipe for disaster.
It is, yeah. Well, you see, this is the thing, and that's what the banks, the central banks are betting, that as long as they continue to print money, as long as they work towards inflation, things will just get themselves sorted out. In other words, the economy will get back on that. That's what they're betting. It's kind of the gamble they're making right now. And here's the thing: a lot of people, and I've been to many seminars and conferences in the last few months, that they're saying no, it's not going to work, and eventually it's going to lead to disaster. And it might. People can actually, people are worried about the inflationary forces, which are bound to happen. I mean, that's what the banks are actually expecting, or they're working towards a 3% inflation rate annually. But if people are worried about all this inflation that's going to happen, and hyperinflation even, and of course the devaluing of the dollar in America, and of course the devaluation of the euro and all that, people are worried about it. What they should really be thinking about is, hedging against that, hedging their life against inflationary forces. And the best way to do that is to look into precious metals. I know this, it's not very smart me saying that. I mean, most people know that precious metals, gold and silver, are a good hedge against inflation. The good thing about gold and silver right now is they're still pretty cheap. I mean, back this time, I think it was about this time last year, gold was $1,900 an ounce. So right now it's at a huge discount. It's about $1,550. Last time I checked, actually it was about just near $1,600 right now. Same with silver. They're hugely undervalued. If they get even cheaper, I'll buy more of them, because eventually, when the Feds, when they start printing again, and I think it's a high probability they will, they start printing, then gold and silver will rally, and they will rally hard.
Right. Okay.
And of course, that's a great way to make money to fight inflation.
Now, that 2,000 mark, is that a psychological barrier for gold? Because we've seen it kind of go up and then crash back down, and over the years we see gold go up, and then all of a sudden it crashes.
Exactly.
But is the crash...
Yeah, round numbers, one thing, this is a technical thing, actually. I mean, yes, a lot of traders who study charts and study markets, like myself, yes, round numbers like 2,000 or 1,500, or even just round numbers like 1,600. These tend to be psychological resistance, that they call them, psychological resistance in the market. Yeah. So, but I think certainly that could happen. That could cause a barrier. But I think if the banks continue to do what they're doing and what they've always done, continue to print, continue to do QE. Gold and silver shouldn't have a problem eventually in the future to go past $2,000 an ounce. Yeah, I'm talking about gold specifically.
Yeah.
And I say this: I know people are probably listening to this and they're thinking, well, when the time comes, I'll think about it then. And this is the biggest problem. This is the biggest problem I always say. People procrastinate and they leave a decision too late. The time to get ready is not 3-4 years down the line, when by that time inflation has hit and we're all sinking in devaluing forces. The time to act is now. So if you really want to get a good deal on the metals, you should be thinking about now. Investing now. And I'm not giving financial advice. I just think the best time to get it ready is now, not 4 years, 5 years when it's already disaster.
No, you're right. The time is now, and I remember saying to my parents a couple of years ago about getting into gold, and they didn't. They ignored me and watched it shoot up and up and up. And then my father took great joy in and then come back to me and saying, "Look, it's crashed. I was doing the right thing not to do that." So now, but that's human nature, isn't it? Human nature is always making us do the wrong thing. Yeah. Now, as always, you're going to advise people now just to read up, make themselves aware of what's going on, but get themselves onto your website, Alessio. Yeah.
Absolutely, yeah. I mean, there's a lot of good books out there, which I've actually put on my website as well. You can go check it out. We also do free training for folks out there who want to learn about how best to trade and how best to invest. So you can come to leadingtrader.com, and it's free to join. And I'll be happy to help folks out there. They're doing it for the last 10 years.
Okay. Alessio Rastani, thank you so much for joining me again this morning. It was good to have you on as always. Okay, take care, Alessio. See ya.
Thanks very much. Bye-bye.